What's going on, guys? It's Henry back with another video, and in this video I want to show you how to grow an account from $25,000 to $100,000. So I previously made a video from $100,000 to $1 million, and now this video I'm going to be a little bit more realistic and cater to you guys with a medium-sized portfolio, which is somewhere between $10, $15, or $20 or $25,000. Okay. Now some of you guys may be asking, Henry, why is your portfolio only $2 million? It was previously $2.1 million. And actually, I want to come clean about something. I have been withdrawing money from this portfolio and I just wanted to diversify more. So I just want to be clear about this because a lot of you guys might be asking me. So if I go into transfers, I really do live on this money. You can see that this is my name, this is my account, and I have recently taken out another $36,000. But anyways, with that being said, I want to talk about the best strategies and how you should treat your money if you have $25,000. And guys, you want to treat $25,000 very similar to how you treat $50,000 or $100,000. In all reality, it's all very, very similar. So if you look at my portfolio right now, I currently have a put credit spread on Amazon. I have some buy call options on Alibaba. And no surprise, the one time I decide to buy call options, it does not go in my favor. AKA, I hate buying call options. I hate buying options in general. I love selling options and making consistent weekly and consistent monthly passive income. That's what I teach on this channel. That's what makes me very different from literally everyone else, because everyone else is buying call options and it just doesn't work. So I guess rule number one is if you want to grow a $25,000 account slowly and consistently and safely, you want to stick to the selling strategies, okay? Very simple. What you want to do, put credit spreads, you want to do covered calls. I recently just sold a put option on Bank of America. I ended up opening this up in my Discord community because a student recommended that I take a look at financials. And financials do seem to be actually having a very good support level. So actually, I want to give you some technical analysis right now. I want to teach you how to make those good technical analysis plays. And I actually want to show you Bank of America, because if you look at the technical chart, you will see exactly where support is. You're going to see exactly what my logic is for investing in Bank of America. So if I go to chart right now, I specifically want to show this stock because I think it's really good for a medium-sized portfolio. Specifically, if you end up selling a put option like I did for 27, right? So as you can see, this is a $27 put. Yes, I sold 10 contracts, but let's just say you sell one contract, that is going to be $2,700. And if you have a $25,000 account, that is basically about 10% of your wealth. And in my opinion, you should go about 10% of your money in any one trade. You don't want to put all of your eggs in one basket and go 50% on one position, because if that position doesn't go in your favor, well, you're going to end up losing money. And I don't want you to lose any money. We all work super, super hard to make money, right? I slaved away on Wall Street for a long time. I had to be in the office at 6 o'clock in the morning because when I worked at Goldman Sachs in Los Angeles, I had to be there at 6 because 6 a.m. in California is 9 a.m. in New York. So making money is really tough. I get it. And you want to be super safe. If you're just out there trying to get rich quick, that's fine, but that's not what my channel is about, okay? But if you are looking for consistent, passive, safe income, then this is exactly what you want to be subscribed to, right? If you're a subscriber, thank you so much. I really appreciate you. Honestly, I love you, okay? But look, okay, Bank of America. If you look at the stock right here, the current price of the stock is $27.69. Now just look at this chart, okay? I actually ended up drawing this purple line right here. So I just deleted this purple line. I want to show you from scratch why I drew this, okay? I'm gonna make it red because red makes everything pretty interesting and cool. So let's go right here. You can see here that there was a very strong support. As soon as this stock touched $26.97, we saw a bounce. That bounce was like a cat that sees a cucumber, okay? That was a big, big, fast bounce, okay? As soon as it hit $26.97, boom, it went all the way up to $28.49. Now check this out. Why is this important, okay? Whenever you see a huge bounce like this, that means there is support. That means a lot of people looked at this stock at $26.97 and they said, wow, this looks like a value stock. Now, guys, look at this, okay? Again, Bank of America went to $26.99. Does this look like a pattern to you? Okay, $26.97, $26.99, and again, we got a bounce. So for me, I now see a double bottom for me, okay? This double bottom means that 2 times the stock has tested this level and has bounced, which is a really strong sign there's a good support in place. And that's exactly why I ended up selling a put option on Bank of America, because I think under $27 per share that this is a no-brainer. Honestly, I just think it's a no-brainer. It's a good addition to your portfolio, especially if you have $25,000 or thereabouts. This is only 10% of your entire account balance. Now, of course, you can also sell puts if you have $15,000, but you are putting a little bit more money as a percentage of your wealth, okay? So for me, I ended up selling 27 because there is good support here. And now what I think is going to happen is basically I think Bank of America can probably ride up to about $28, maybe even $29 or $30, right? We can see that this stock is no stranger to the $30 level. And in fact, I mean, this stock was at $36. If I go to the 2-year chart, this stock has been over $40 per share. So right now, as you can see on the 2-year chart, this stock is really low. In fact, it's at a 2-year low, which is, instead of a 52-week low, it is a 104-week low, which means that it's a very good value. And that's actually why I ended up opening Bank of America. So I ended up opening 10 contracts here, but I'm also doing call credit spreads, guys, because I'll be honest with you, I don't know what's going to happen with the market. I have no clue. If anyone tells you that they know what's going to happen in the market, they're either trying to sell you a course, they're trying to convince you for their own benefit, or they're just straight up lying to you. So I don't think that I can predict the future. I don't think Warren Buffett can. For me, I want to be smart, use technical analysis. I want to use fundamental analysis. I want to get to know a stock. I want to date this stock for a number of weeks before I even trade this stock, right? Because if you look at my watch list, guys, I'm just trading the same stock. So when people join my Discord community, they just see the same trades. They see me doing Apple, Airbnb, Adobe, Coin. I'm doing some Costco right now. JD has been a really good play. I like China. I want to diversify because we know we have some troubles in the United States of America. You know, we kind of have a little bit of a collapse going on, the Western collapse, where, you know, our culture and our money and many other factors. You probably know what I'm talking about. If you know what I'm talking about, leave me a comment below. Is US kind of going down? We're having some hard times politically as well. But look, JD is an interesting play, as well as Alibaba and NIO. These are the 3 stocks for me, which I am investing in. Yes, they're China, but look, I see China going up. I see them doing the right thing. I see them taking the conservative approach. I don't see that happening in the United States of America. Okay, I see a lot of issues, so I want to be diversified, guys. It's always smart to be diversified. Plus, especially what's happening with the US dollar, it's kind of scary, right? We're kind of getting off the US dollar standard, and other countries are, you know, kind of going on a side eye. They're doing their own thing. They're using their own bread to make their own avocado toast. Okay, so for me, I'm a little bit nervous about that. So I really like having some China exposure. But you'll also notice that because I don't really know what's going to happen in the market, and because it's kind of shaky, I am utilizing a lot of call credit spreads, guys. That is exactly what you should be doing with a medium-sized portfolio or even a small-sized portfolio, because spreads are fantastic. You can use a little bit of money to make a really large amounts of money in terms of returns, right? So although you're not going to make like $1 bajillion, you can see right here that I have a Tesla call credit spread, and this is a very safe call credit spread. I mean, just check it out. Tesla is $171 per share, and I have ended up selling the $225 and the $230 call credit spread, which is very, very out of the money. In fact, if I show you on a chart right now, you're gonna say this looks safer than my grandma. Now, my grandma's really safe. Whenever she drives like 20 miles per hour and everyone's honking at her. But look, there's nothing wrong with driving slow. And there's also nothing wrong with making consistent weekly and consistent monthly income. That is not a lot of money, but it happens every single month. And whenever there is a red market, whenever there is bears on Wall Street, the grizzlies coming out there just kind of, you know, doing the grizzly things, and, you know, they're not having their honey, so they're really angry, they have a big attitude, and everyone ends up losing money, guess what? You end up doing just fine because you are selling out of the money options. So even when the market pulls back by 10%, you have pulled back about 1 or 2%. And that's exactly how you beat the market. On the downturn, you do a lot better. And when the market is going up, you're using smart option strategies to make a little bit more money than the market. So when it goes down, you outperform significantly. And when it goes up, you also ideally outperform significantly. But, you know, for me, I'm using covered calls, so I am kind of collecting consistent income. But sometimes when the market goes up 50%, you know, maybe I'm also up 50% because I'm using options, but I could be up more. You know, I still have some more work to do, but for me, it's all about consistency. So this is why if you look at Tesla right now, I'm going to show you the chart. You're going to be surprised, okay? Tesla has a top of 228. How do I know that? Well, this is the Bollinger Band. I love using this in my Discord and my coaching all the time because rather than using, you know, a bajillion indicators, and there's actually a bajillion, look at this. There's accumulated distribution, there's ADX, DMS, there's an alligator. Ooh, I'm kind of scared of alligators. Those are scary. Guys, there's beta, there's Bollinger Band. Well, actually, I love the Bollinger Band, but center of gravity, chalk in money flow. There's all these, like, look how many there are. And guess what? None, and I mean none of these are actually proven to really work, okay? These are just fancy things to waste your time, okay? If you actually want to have success, you want to keep it very simple, okay? This is why I teach simple, because, you know, even a stupid person is going to make money with me. I'm just going to be straight up with you, okay? I'm sorry if I put it that way, but even a stupid person is going to make money with Henry, okay? With myself, because, you know, other people, they just complicate it. They get stressed out and they don't know what to do, and they don't cut their losses fast enough. They don't take profits when they should be taking profits. They get greedy, they get selfish, they get all these, you know, normal human emotions. There's nothing wrong with that. I'm greedy and selfish too, but I also love to give and I also love to teach. But the moral of the story is you want to be careful. You want to sell options that are out of the money, guys. So right here, I'm using the Bollinger Band. This is pretty much the only thing that's proven for me before I went off on that long tangent. Okay, for me, I like the simple stuff. I like Bollinger Band, I like moving average, and I like RSI, okay? Sometimes I do use the MACD, so I do use 4 different indicators, but when I worked on Wall Street, I really didn't see them using all this crazy stuff, okay? They did use VWAP, I will be honest. They did use VWAP, so that's something that I don't really use myself. And the reason why I don't really use VWAP is because a lot of investors who are using VWAP are trying to buy large quantities. They want to make sure that they're buying large quantities without moving the price too much, because when a company or a, you know, hedge fund ends up putting like $100 million in one position, they can move the stock in one day. But, you know, unless some of you guys have $100 million, then we are not going to be moving any stocks. That's why I always laugh when people like Henry's getting paid to, you know, promote this stock. Guys, I'm not getting paid to do nothing. I get paid on my Discord community, yes, and I'm really clear about that, but nobody here has to buy it. Only if you really want hands-on coaching. If you don't, totally fine. So the moral of the story is keep it simple and stupid. That way, even if you're a complete dummy, you can still make money. And guys, it's not like I'm a genius. I make mistakes all the time, which is why I also like to keep it stupid. That way, if I end up doing something wrong, or if the stock ends up moving against me, I am still going to be in the green, in the money, in the guacamole. You know what I'm saying? Okay, all right, so check it out. 171 is the middle of the Bollinger Band, 228 is the top. Now, I have a 225 call credit spread. I could have went higher. Now, also keep in mind, I did open this position a few days ago, and I'm actually already up a good amount. Oh, actually, sorry. I'm already up 100% on this option. It's actually expiring in 10 days. So I actually ended up opening it up on April 17th. So this is actually a monthly trade. So I ended up making $430, and I ended up opening 10 contracts, and each of these contracts was $500. So this is $5,000 and I made $430. So it was roughly an 8% return per month. And for me, if I can make 8% per month in return, that is a whole lot of money. Now, I totally understand if you have $25,000, you probably want to make more money faster. You probably want to get your $25,000 account to $100,000 yesterday, right? Yesterday would have been great. I'd probably want 10 million myself yesterday, but hey guys, it takes time. This is not a get rich quick. And here's what you have to do to grow a $25,000 account to $100,000. You have to use selling strategies, and you need to consistently pay attention to the market, okay? You don't have to watch it every single day, but look, a position like this that's gonna make 8%, if you can make 8% every single month on essentially $25,000, you can make over $2,000. Will it take time to grow to 100,000? Absolutely. But in a year, you can get that portfolio to 45,000, maybe 50,000 if you double your account in 1 year. If you don't have a job, I don't blame you. I hate working myself. But if you do have a job, which 99% of you guys do, then you want to use that money and fuel your portfolio further. But please just do me a favor first. Get consistent. Make sure that you're watching my videos on selling options. Make sure that you understand the wheel strategy. Make sure that you understand the different strategies that are actually profitable, not the YouTubers that just post videos to get views on buying the latest company or buying this small penny cap stock or buying call options on this or earnings plays. Guys, I don't really do too much of that. Now, I will come clean. Sometimes I do earnings plays. I use OptionsFi to do that. I go to their earnings tab and I will make an earnings play. But for me, to be honest, I'm only playing earnings when I'm pretty positive. So for example, if I look at a company, let's take Amazon, for example, they have an implied move of 2.57%, okay? So an implied move is basically how much that stock is supposed to move based on their options. So this is what the market is pricing in. And you know, if you take a look at a stock like Amazon, typically it does move quite a lot actually on earnings, especially when they have a big beat or a big miss. So sometimes I'll go ahead and I'll buy options, right? I think that this recommendation tool and using AI makes a lot of sense. But guys, again, when I'm buying options, I'm not using more than 3 to 5% of my capital. A majority of my capital is going for safe plays like the wheel strategy, selling puts, covered calls. Yes, I'm using OptionsFi to save time. I'm using it to get ideas on spreads. I'm using it sometimes for earnings, but let's be honest, I'm pretty simple. I'm a simple guy. If I can make consistent income without putting in that much work, that's what I'm gonna do. I'm not gonna go for anything fancy because I see people doing it all the time. They do full-time trading, they spend their entire 8 hours, and guess what? They end up spending all that time and they still can't even beat the S&P 500, okay? So in my opinion, you just need to stick to call credit spreads, put credit spreads, selling puts, like Bank of America is good. American Airlines is also really, really good. I love American Airlines. I mean, for me, American Airlines has been a breadwinner. I mean, I've been eating good French toast every single morning with some strawberries and blueberries and some whipped cream because American Airlines continues to make me really good money. I mean, it's not $1 million, right? Like you can see I'm making $45 here. And if we actually look at my history for American Airlines, let's go into my history, okay? Because I just want to show you how consistent American Airlines is. And yes, my average cost is $15.50 and I'm currently down $230 on the stock, but the options themselves have been printing money. And when I say printing money, I mean like 50 to 100 bucks every single week, but that has been going on for literally, I don't want to say decades because I've only been investing for 9 years now, but I've probably been playing with American Airlines for a good 6 years. And actually, let me just show you how it looks like. Okay, so this stock has been going down, but in any 1 week period, despite it looking like it's crazy, it's actually fairly stable. And when you're selling put options, what ends up happening, this is also so beautiful. This has happened to me so many times and I end up being so happy. So I end up selling a put option. Let's say like it's at $41. Well, this is actually a long time ago. I wasn't really trading it in 2018 as much. I was just a dividend investor back then. I was really boring and I wasn't getting the type of returns I get now, but let's go something like right here, okay? So if on July 2nd, 2021, I ended up selling like a $20 put, right? So it ends up getting put at 20 and then boom, it just jumps back up to 21. And that happens literally all the time. And that's actually a very good thing with all this zigzagging. So let's say you sold like a 35 put option. You ended up getting put, right? And the stock went down a lot. But if you're a little bit patient, boom, this thing goes back up to 40. So this zigzag is actually a really good thing. And volatility is a good thing, my friends, for option trading. I mean, seriously, a lot of people get afraid of volatility. They're like, oh my gosh, I'm gonna end up losing a lot of money. But in fact, if you are patient and you know what you're doing with option trading, you can make a boatload of money with options, especially when the market is volatile. Because the more volatile the market, that means there's more implied volatility. And when there's more implied volatility, there's more premium. And when there's more premium and you're selling options, guess where that is going? It is going to your pocket. All right, and the last thing that I want to leave you with, if you're trying to grow a $25,000 account, I get it. It's like a weird territory because from one perspective, you can't really throw a lot of your money into huge ETFs and just like ride them to 100,000. And then also it's not a little amount of money, so you don't necessarily want to do super risky stuff with it because I mean, that's your hard-earned money. But I will leave you with one thing. You still want to be in ETFs. You still ideally want to be in SPY, in triple Q, and you ideally want to use spreads on those because, I mean, it would be great if you can just sell puts on SPY and puts on QQQ, but if you just have a $25,000 account, you're probably going to have to do a little bit more spreads, and that's totally okay. That's just the nature of growing a smaller portfolio or a medium-sized portfolio for that matter too. If you want to join my challenge from growing a medium-sized portfolio to a much bigger portfolio, then feel free to check out the first link in my description to schedule a free call after you watch the training to work with me hands-on to show you how to take a $25,000 account to a $100,000 account. Just promise me one thing, have a long-term mindset. It takes time. It's not a get rich quick. But if you're determined and you're dedicated, you will absolutely get there. Option trading has been the best decision I've ever made in my life. It took some consistency, but it is totally worth it.